Welcome back to the free Power FX trading course. In the first video, we went through and spoke about what is forex and different major currency pairs. In episode 2, we will be going through the different types of markets there are and brokers and what role they play. A market is where buyers and sellers can meet to facilitate the exchange or transactions of goods and services. Two parties are generally needed to make a trade. However, a third party is required to introduce competition and balance the market. With it used to be an in-person deal and negotiation, most of this is done online now. With this being the case, both parties need an intermediary, someone they can both trust in order to come up with a deal. That's where brokers come in. What is a broker? In the simplest of form, a broker is an individual or firm that acts as an intermediary between an investor and a securities exchange. It can also be deemed as a role of someone being in a firm who acts as an agent for a customer, being yourself, and charges the customer a commission for its services. Whilst they let you use their services to make money and trade anywhere around the world or on the internet, most brokers take a very small percentage of commission per trade, with other brokers being different from others. Two brokers that I recommend with small commissions would be Vantage and IC Markets. Now we know what a market is and what brokers do, let's explain the different types of markets there are. Let's start with stocks, the stock market. How most companies start, they start with one person or a partnership that built up a business from scratch, this being a private endeavor. With it being a business, at some point the business needs a big load of cash to grow their business and expand. So what they would do is come into the stock market and sell a part of their company to the public for an exchange for cash. They do this to clear debt, expansion, or for whatever the private endeavor wants it for. Once the percentage of the company would be sold, this would be called a share or a stock, as you're owning a part of the company, that's being the stock market. You can buy government debt, where you would send money to the government and they are supposed to pay you back with a specific interest added on top, with that being called the bond market. We have the commodities market, where the commodity market involves buying, selling, or trading raw products like oil, gold, or coffee. There are hard commodities, which are generally natural resources, and soft commodities, which are livestock or agricultural goods. The commodities market, this market providing all the things we need for day-to-day life. Lastly, as explained in the first video, the foreign exchange market, also known as forex, FX, or the currencies market, is an over-the-counter OTC global marketplace that determines the exchange rate for currencies around the world. People who trade in these markets can buy, sell, exchange, and speculate on the relative exchange rates of various currency pairs. In summary, markets are simply where people meet together to exchange goods and services to one another. Brokers allow you to trade in these different markets online from anywhere in the world. Forex trading allows you to make money by purchasing different currencies with volume and selling. That is all for the second episode in Series 1. Happy trading.